Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the short-term breakout of 89,000, discussing the rally up to a critical level of weekly resistance at 93.6. This weekly resistance being not only the local short-term resistance level we are now retesting following the break of 89,000, but of course that prior weekly low represented by this point on the chart, marked out by the low point of a horizontal consolidation spanning over 2 months back in November, spanning into February. We are going to be discussing the consequence of a potential rejection from here, whether or not the market will continue through this point, and the impact the recent breakout of 89,000 has had on both the total market cap and the total altcoin market. Before we get into all of the content, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, go ahead and join the VIP channel. To do that, you can click the pinned comment, contact our admin by clicking this name, checking out a 50+ month trading track record by clicking the first link, or check out a 10-minute video showing you inside the channel by clicking the second link. You'll get access to 2 main channels: the primary VIP trading channel, where you'll get access to trading setups with exact entries, targets, and stop losses, including justification and exclusive analysis, as well as the main VIP group chat containing the general chat, the trading chart and education chat, the help chat, the daily news chat, and of course the community trade setup chat. Check it all out. We have over 700 members, and we'll see you in the channel. Let's go ahead and dive into the content. So as we can see, over the past 48 hours, Bitcoin saw a parabolic break through that 89,000 resistance, resulting in a rally of around $6,000 in the market price of Bitcoin in the matter of hours. Since then, we saw a move up into a critical level of resistance at 93.6 to 94,000. This not only being the buy side liquidity of our prior level of resistance, of course, with this horizontal level here, which we broke down from, seeing a cataclysmic breakdown in the course of around 15%. This is about a 15% reduction in the price of Bitcoin in a matter of days, only then to see a retest of this level. But now yet again, we have seen this level retest for a third time. We have also seen a major retest of this level here on the weekly, representing that weekly low of what was a 2 to 3 month long horizontal consolidation between the dates of November and eventually that breakdown at the beginning of February 2025. So we are now retesting a very significant level. Now with the break of 89,000, we not only saw Bitcoin go up towards the upside obviously, but we saw the rest of the market rally too, of the total market cap breaking out of this higher time frame downtrend. And of course on the right hand side here, we can see the total altcoin market cap doing a very similar thing. We are going to be discussing expectations for the total market cap and for the altcoin market cap as well in today's video. But let's start on the market data. 24-hour volume down 24%, 234 billion. Liquidations down 27%, 269 million. 143 million coming from longs and 126 million coming from shorts, telling us already there is a large amount of indecision at this level of resistance. Now, when we have periods of indecision, this is generally an indication of, especially after larger moves, exhaustion, but most importantly, consolidation. So we are trying to figure out now, the market's trying to decide whether or not it's finding demand at these levels to facilitate a continuation, or if the buying pressure is going to dissipate to the point of which the sellers will naturally take over and push the price down. We'll jump into that in more detail in our short-term analysis today. But we're definitely seeing here for the first time ever since the break of 89,000, a degree of resistance, a degree of selling pressure beginning to step into the charts. let's move over to the DXY. The DXY over here, guys, we have seen, of course, we bounced up to retest that 100 zone. Overall, we are still sitting underneath that 100 zone and that prior change of character, expecting a overall macro trajectory toward the downside over the course of 6 to 12 months. Again, when this macro move starts to begin again, under this 100 level is going to be heavily determined based on interest rate expectations and what they actually do with interest rates. We do have the next interest rate meeting in 12 days. That is something to keep a very close eye on. And of course, if we are able to break back above 100, get back above the change of character, we may mark this as deviation and continue into the 200 moving average, similar to what we saw on the top side where we had this deviation and thus a continuation back down. So paying close attention, but of course, as always, the DXY is heavily correlated to what we see interest rates do, and more importantly, the expectations of what interest rates are likely to do in future periods. Looking at the S&P 500, the S&P 500 is looking pretty good over here. Of course, in yesterday's video, we saw a very important breakout of a RSI trendline. This RSI trendline was, of course, representing the overall momentum in the price action since we established our high at 6,200, our lower high at 5,800, and even our most recent lower high at 5,500. We can see these recent high points line up perfectly with the retests on the downtrend of the RSI. We have now seen a breakout of that RSI, indicating momentum is shifting positive. And what we have seen most recently, actually, what we can see here in the last day, we have seen the price action has completed a change of character break of the prior lower high and break of structure. So we are beginning to see the strength shift. We are beginning to see the structure shift. So we've got strength, we have got structure, and then the last thing we have is trend. What we can see here now is we're coming up to retest that critical downtrend. And there is no coincidence that the S&P 500 here is retesting a critical point, just as Bitcoin is as well retesting a critical point. So both the S&P 500 and Bitcoin are now retesting very, very important levels where rejections or breakouts and thus continuations could resume from. That is it for the broader market updates, guys. Let's go ahead and jump into the crux of today's analysis. Now, before we do, if you are interested in supporting the content and supporting yourself on your trading journey, sign up to BitGet, BitUnix, or BingX with the links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees, which can build up to 45% based on your trading volume. You'll be trading on exchanges I use and I trust, and of course, you'll be supporting yourself and supporting this content. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump into it. So taking a look at the retest, as we can see here, with 3 days remaining until the weekly candle close, the Bitcoin price is currently still sitting underneath the $93.6 thousand weekly resistance. Now, we discussed in yesterday's video the significance of this resistance, and we're going to briefly go over why this horizontal level is so important. So, taking a look at historical price action, we can generally look at how the price action has responded and reacted to retests and breakdowns of this horizontal level to determine the significance of this level and what significance this level may have in future. So, taking a look at this horizontal level, 93.6, we have seen again it held as a weekly support for around about 3 months. And when we saw a breakdown of this weekly level on every single occasion, we saw very, very large and very aggressive wicks toward the downside, with one of those wicks actually being closer to 20%, a 17% reduction. When we finally broke toward the downside, we closed the candle at a point of which was around 14% underneath the opening price, which opened just above that 93.6k level. So we know historically we have seen very reactionary price action upon the loss or upon the breakdown of this horizontal level historically. So we know this prior level of significance becomes a future level of significance. So 93.6 is of course a critical level that will massively impact the direction of the price action on the macro. If we're looking for continuations higher, this is the next level of resistance we need to break out from. Of course, the breakout of 86,000 facilitated a move into this next resistance, and now breaking this next resistance will facilitate a move into that 104,000 region. So we do expect a move to 104,000 only if we are able to establish this level as a support, but currently it is a resistance, and resistance is resistance until it is not, and therefore we have to be aware of the potential for rejections, but most importantly, what impact rejections may have on the context of the trend and the probabilities of the trend changing. So we're going to discuss all that in today's video, but it's very important we bring to your attention that we are now retesting a level that should be considered significant, and I would say has proven historically to be a level of great importance. So watching that level very closely into the weekly close. And again, the closing price of the candle simply suggests the longer the price has remained above a level of horizontal liquidity, the longer amount of time or the larger amount of orders have built up below that price of liquidity, thus establishing it as a greater level of support. And that is why we use time frame closes to confirm breakouts, or to at least increase the likelihood that these horizontal levels of liquidity will sustain as support. So it's not necessarily the close indicating that being the trigger that the price will continue upwards. It is more or less the point of which when it closes, it changes the probabilities that this level may hold as a support or not. To give you an example, if we were to look at a level of horizontal liquidity such as 89,000, a 1 minute close above 89,000 would have less probability of sustaining than if we were to see a 1 hour close above, because a 1 hour close above would represent more time of which the price action has remained above this level of liquidity, and thus we've had more time that orders can begin to develop below, establishing this as an area of local support. So when we're looking at time frame closes, we're not using it in the sense to say, well, we need to see a 4 hour close to confirm this is the entry for the move upwards, but it is more or less the 4 hour close will confirm the probabilities that the price action will not see a fake out of this breakout is much higher. So I hope that gives a little bit of insight and shines some light on how time frames are used. Remember, the market doesn't really know what the time is. In that essence, the market is built up of traders. Traders are paying attention to time, and thus they impose their personal biases and expectations and strategies and blah, 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 blah. And that can have some relevance to the time, but when we're looking at time for the sake of trend structure strength, when we're looking at time for the sake of breakouts, it is not to confirm the breakout, it is to confirm that the likelihood that this breakout will sustain will be higher than not. So when we're looking at this weekly over here, we are watching the weekly close, because a weekly close above this level will increase the likelihood that this short-term resistance here, which is also the high time frame resistance, will flip into an area of support instead of being an area of current resistance, which it is. So let's talk about the short term now. As we can see, Bitcoin has now retested 89,000, and of course, we've broken through 89,000, now retesting 93.6. 93.6 is the weekly resistance, and this level is a level of utmost significance as we just discussed. Taking a look at expectations, resistance is resistance until it is not. On the higher time frame, if Bitcoin wants to continue upwards, we need to clear this prior week high at 94.73. Best case scenario, if we clear this high, we could see a liquidity move up into around 96 to 97 before we then make a definitive directional continuation either up or again deviation continuation down. Ideally, we would see the weekly close above, facilitating that continuation up. But if we do want to see that next leg up, regardless of whether or not it's going to be a sustained continuation or a deviation and then rejection, we need to see that 94.7k break. Okay, that is absolutely apparent. We have to see that level break to confirm we are going to see the next leg up. Again, whether or not that leg will sustain or not is another question, but for that leg to initiate, 94.7 is the trigger point. Until then, resistance is resistance until it is not, and there is a potential we do see corrections develop. As we discussed in yesterday's video, there was exhaustion developing, there was weakness developing. We saw, of course, the bullish momentum begin to exhaust, as represented by the weakening positive momentum, and we saw some key levels on the RSI breakdown, particularly our horizontal low here on the RSI. It broke toward the downside. With that, we saw a correction into the 50 EMA, which has now established an area of local support and is going to be a trigger for the continuation lower. So when we're looking at potential corrections back into 89,000 to retest 89,000 as a reversal point, as a support point, we need to lose the 50 EMA on the hourly. If the 50 EMA on the hourly is dropped, we will then expect this local low to be taken out, and that will be the trigger for the continuation lower. So we're looking for new short positions. I'd probably look to enter new ones upon the loss of this local low, because the loss of that local low will be, of course, underneath the 50 EMA, and of course, this can break down from this horizontal level of liquidity, facilitating a move to our next support at around 89,000. On the bullish scenario, as we discussed, we have a potential horizontal range developing here from these lows and to these highs. If we break through these highs, potentially around 94.2 to 94.7, we may see continuations into 96, into 97,000. Until then, we have to understand that this is resistance, so the possibility of a correction down is there. It is probably more likely, but until we see that break of the range high, we need to be aware of that being a potential. So overall, I am slightly more bearish. If we break through this region here, I expect a direct continuation upwards, and if we break below this low here, I expect a direct continuation downwards. Until then, again, trading level by level, reacting to how the price action is developing, while being aware of the context of which the price is retesting a critical level of weekly resistance. Ideally, we continue upwards, but we just need to pay attention to how it develops. So let's talk about that. If we see that correction downwards, we see that continuation upwards, what impact may this have on the charts? First and foremost, a correction back to 89,000 would not be bearish. We need to get that clear. A retest of 89,000 would not be bearish. In fact, it would be relatively bullish. Only a loss of 89,000 would pose any real threat to the higher time frame integrity of this trend. And if we're looking at weekly confirmations, a loss of our weekly high over here at 86,000 would almost guarantee that this is going to crumble. Meaning if we lose the weekly of 86, I think it's going to be very likely we drop into and below the Gaussian channel upper band. We know already that a loss of the Gaussian channel upper band results in a correction potentially to 55, 52,000. Okay, so what would it take for Bitcoin to lose 86? Well, losing 89,000 would be the starting point. So if we do see that correction develop and we do not bounce from 89,000, well, then we run the risk of correcting into 86. And again, losing 86 on the weekly is going to be the bearish trigger for a correction into the Gaussian channel, which we know to be the macro trigger for a correction down. And of course, just as this being the bearish trigger, the bullish trigger for a next leg upwards is going to be 93.6. So the level of significance, yet again, brings us back to 93.6 and brings us back to the short-term consolidation here after a fantastic rally toward the upside. Let's move over to the total market cap. The total market cap has seen a good move upwards. The total altcoin market cap has as well seen a very good move upwards. When we're looking at both these charts from a weekly perspective and a daily perspective, we can see, of course, we do have some trigger points we are watching, particularly this overall downtrend here on the RSI. This is going to be the total market cap. We still do have bearish divergences. So again, these bearish divergences that developed since that high December. We have still got that. We would want to see this absorbed. We want to see the break on the RSI to really facilitate that next leg upwards. Until that happens, this is still going to be an assumed top. Okay, it's still going to be an assumed top, meaning any sort of rally toward the upside is not assumed to surpass that level while the RSI is under this trend line because momentum is still negative. Expecting breakouts when momentum is negative is overall unwise. Now, that doesn't mean we can't see a fantastic reversal for the market and a fantastic reversal for altcoins. It does not mean that. We are likely already seeing that. In fact, we're already seeing a lot of altcoins perform very well. But when we're looking at the context of the trend, if we want to see the price surpass this high, we need to break out this RSI. Until then, a good rally upwards while we're above this downtrend is looking fantastic. And of course, if we can establish some new levels of key support, particularly establishing, we're looking at around this over here, 2.85 trillion as a level of support, that would be ideal. If we lose this level of support here, which represents this retest and this high, if we lose this level, well, then we run the risk of a steeper correction. But if we retest this level and bounce back upwards, fantastic stuff for the market. It is likely we continue into the 3 trillion, potentially into the 3.2 trillion, which will facilitate Bitcoin well above 100,000. Looking at this chart here, the total altcoin market, very similar scenario, still relatively lagging in comparison to the total market cap. The total market cap being respectively above this local high. We can still see we are sitting underneath that $840 billion level. Now, the $840 billion level, as I've mentioned many times before, is the trigger for the altcoin market as a whole to really start going bullish, okay? We've seen a great rally upwards as a consequence of the weekly breakout into the Ichimoku cloud, okay? But if we want to see these breakouts for altcoins really sustain, we want to see altcoins really start doing 20, 30% moves, okay? We need to see 840 billion break. We need to see this prior high break. We break through here, we can rally all the way to 980 billion max, okay? But if we reject from this region, we don't get through here, all we have done is created yet again another lower high. So you can see how this level here on Bitcoin's chart has not only got macro implications on Bitcoin, okay, short-term implications, but also applies a lot of significance to the next movements for the broader cryptocurrency market and the altcoin. So thank you for tuning in, guys. Have a fantastic day. We'll catch you guys on Sunday. I'll see you all then. Bye.